2014, and we will be also do a quick recap for the previous fall. Following that, we'll be going over last year's most interesting event, the polar vortex. We'll do a little recap, and we might be briefly talking over the upcoming winter and the expectation for that too. We will also be talking about the weather and demand forecast, the energy generation outlook for the winter, and we will also be talking about some of the new outages and potential transmission work that we will be expecting during the winter. And lastly, we will be just spending about 5 minutes to talk about some of the major market changes. So let's start to do a quick recap on the 2014 winter, and let's have Pat to talk briefly for last winter.
All right, yeah, just go over last winter's demand recap. As we all know, it was the year of the polar vortex. So that was really an area of Arctic area that was pushed down into the eastern half of the U.S. and it caused multiple 3 to 4 day periods of extreme cold. One of those led to a record peak for the footprint in January 6th. As you can see in the table up at the top there, that's over 108, almost 109 gigawatts. There were really some almost ridiculous temperature readings there. We had a high of -12 in Minneapolis, a high of 2 in St. Louis, and a high of 39 in New Orleans. So it was really just cold all over the place there. So winter as a whole last year was one of the coldest on record in the Midwest, and although we're expecting a colder than average winter this year too, it's not going to be near what we saw last year. So moving on to some constraints last year, we're going to move on to Jeff.
Thank you, Pat. The first slide that I have here is showing the top constraints that we saw in the real time during the last winter. That's the winter 2013-2014. Number one on the list here, we have the Bloomington transformer, which came in with the highest count in the 5-minute interval, and that was due to an outage and some strong nearby coal fire output. Moving down the list, the highest average shadow price is actually at Monticello, East Winnemac, and that was in January, attributable to strong central zone wind generation. A little bit further down the list, we have the reverse Orca interface, which I'll be talking about in a little more detail in a few more slides, and that peaked as well during January with strong heating load across the footprint and power flows to the north. And as far as south constraints, the one there in the 9th spot is the White Bluff, which we saw in February with the outage near Woodward. The second slide here is basically a mirror image, but with the top day-ahead constraints that we saw during the same time frame. Again, second there is the Bloomington transformer that we just talked about in the real time, with the highest hourly count there. A little bit further down, east Winnemac, Monticello, again, with the highest average winter shadow price in January with the strong central wind generation. And then for south, we saw the Nelson congestion there with a work around the Cypress transformer. So this is a little bit of an expanded view on the polar vortex event as it influenced Orca congestion as it was known during the winter last year. January was the first full month following MISO South integration, and it also coincided with extremely cold temperatures across the footprint. Power balance, as it's called now, and it was called Orca at that point, it developed in association with the peak in cold temperatures and helped to contribute to strong Indy Hub pricing at times through the month. Looking at the graphic here, we've got temperature on an hourly basis for New Orleans and Chicago as the proxies for the footprint. and then along the bottom there we have the Indy Hub LMP price and the intervals of which power balance south to north was hitting. You can see there's a very nice correlation there between the activity in the power balance, the extremely cold temperatures, and bullish Indy Hub pricing that we saw last winter. So as far as how this impacts our outlook on this winter, we aren't currently expecting cold snaps that are quite as extreme as we saw last year, which were record-breaking or the coldest seen in 20 to 30-year time frames for some areas. But it will continue to come into play at times during the winter. Although we expect it to be fewer surprises in terms of the interactions of temperature and load and the power balance than there were when we were fresh into MISO South last January. And in addition to that, in July of this year, MISO established the hurdle rate in order to try to put a better cap on the escalating costs that we saw in January of 2014. So we're going to move into a recap of this just completed fall season, September through November. Just looking at a few different points here around demand and pricing. During the fall, we had a brief shoulder season, as we would call it, because we saw some lingering cooling load rather into September, and we saw a sharp rise in the heating load in November, leaving pretty much October as the low point for the season, as indicated by these average peak demand numbers here, going from 90 gigawatts September on the average peak down to 80 in October and rebounding back up to 86 through November there. You can see that a lot of that was driven by central zone with a brief dip in October before rebounded strongly in November there. And that same story follows right through the pricing, both the LMPs and the gas pricing. Looking at the monthly peaks in the second section there, we hit the September peak very early in the month, driven by a really strong late season cooling load at 110 gigawatts. And you can see that south demand during that period was a robust 28.7. We had a lull in October, dipping down with a peak for the month early in the month at 87 gigawatts, and then we rebounded pretty strongly with some abnormally cold November temperatures around the 17th there, with a peak rebounding up to 97 gigawatts on heating load.
Thank you, Jefferson. So following the fall, let's take a quick look at the previous fall's real-time versus day-ahead constraints. And here we got the Attitude Tiger that's been printing the highest on a 5-minute interval basis. Basically, this is a constraint down in the south. We actually have been seeing this constraint posting for a very long time. We used to see some outages around the Port Hudson transformer, and we used to see some outages around the Willow Glen, the Attitude Tiger transformer, and currently we are seeing the Bogalusa transformer line outage. So that's been driving the Attitude Tiger in both the real-time and the day-ahead, which is super bullish on Louisiana. Following that, we were also seeing the MWAX, that is also the Min to Wisconsin interface. So the triggering point for this was the generation outage in Wisconsin at a major baseload unit. And we sometimes see this MWAX being a little bit more active should there be additional wind available in the north. So this is also a major constraint that we used to see in the previous fall. The other one that we've been seeing a little bit more often towards the beginning of November, end of October, was down the road, the second to the bottom, which is the Frankfort to Franklin Junction congestion. And that is a constraint connecting southern Illinois to southern part of the Indiana. So that's been posting. It's been mainly a morning peak risk in the real time and also a on-peak risk in the day ahead. We see this as a result of some of the 138 kV outages around Bensonview, Eugene, and also work around Bensonview transformer. So this is also a really major constraint that we used to see back in the fall that is also bullish on Indiana hub. So following that, we are seeing the day-ahead constraint, and on the top, we are still seeing the outage to Tiger. On an hourly interval, we also see this binding quite often. Outages, the drivers are identical to the real time. We were also seeing the Franklin to the Frankfort to Franklin type of congestion being a little bit more active in the day ahead as well. And the driver in September, this was a little bit more active. That was due to another outage at North City to Muddy line outage, and this constraint also transcended into November and was also very active in November. So that kind of concludes the previous fall, and let's take a look at the upcoming winter and the expectation for the demand forecast. So let's have Pat to talk about these slides.
All right, yeah, let's just jump right into the temperature maps broken down by month. As you can see, we're expecting a pretty warm December. We're already starting to see that in the next 2 weeks at least, maybe even 3. As far as what we're expecting, about 2 to 3 degrees warmer than average in parts of central and even going down into south. And closer to normal, maybe a degree or 2 above average in north. But either way, we think it's going to balance out to be pretty warm. Where we are seeing the cold start to creep back, we think in the last third of December. That could be our main cold risk there. And that's when we start to go into January 2015. You can see the cold anomalies really start to take over there, especially in the northern tier. We have 2 to 3 degrees colder than average in Minneapolis, and then still 1 to 2 degrees colder than average for pretty much all the main cities in central and south. So, and that only intensifies going into February. You can see we have that's where the cold outbreak is going to be focused more on. Or it might not even come at all, and it'll be a little bit warmer in the north. So we'll have to figure out there. But then definitely as we go on into the rest of the winter, we're focused more on colder risks. We're expecting actually drier than normal winter in the Midwest, and snow cover is really what you look for to enhance cold anomalies there. So if we do get some snow cover, we'll likely see even colder anomalies. This is just a quick little graph to kind of illustrate how heating degree days and demand tend to relate to each other. You can see that demand tends to peak, at least in the last 9 years, 7 out of the last 9 years. Demand peaked in mid-December to mid-January. And that's partly because the coldest winter temperatures typically occur in the middle of January for the major demand centers. And that's through the main days of the week, so Monday through Thursday. So based on past patterns, peak demand is favored to fall in mid-January, but we're going to have to see how that evolves based on how we're expecting cold anomalies to intensify in February. All right, so just taking a quick look at what we're expecting for wind generation. Historically, winter season wind generation tends to be very strong across the Midwest. And west wind typically holds a bit of an edge over central during this period, and that we're definitely expecting to continue heading into the spring. Now, the one factor that does kind of influence that this year, we're expecting a drier than normal Midwest, and that tends to indicate below average wind generation. So again, as I said before, if we do get that snow cover and more precipitation, we could see wind gen even start to increase even more. But we're expecting below average right now.
Thanks, Pat. So after the wind gen, let's take a look at what might be the changes for the baseload gen. So currently, several big rail companies are experiencing really high volume, and that had led to delays in terms of the shipping of coal into many power plants. I guess the major cases that we've been seeing is the BNSF and the Union Pacific and Kansas City Southern. They have also been struggling with the high volume. So that also led to a lot of delay in terms of transporting coal into to power plants. The past September, Minnesota Power also shut down. They had to shut down 4 units at the Laskin Taconite Harbor near Duluth. And that is due to the low stockpiles, also because they had to save these coal for the winter season. So the expectation for the upcoming winter, we think that we might be losing the ELMP or the Genoa, which made up to about 500 megawatts of base load gen there. That is Dairyland Power. They claim that they might have to shut down these 2 units just due to the low coal stocks. So if that does happen, then we will be still continue to see the strength in DPC, and that is currently ongoing. So that's one of the major changes that we will be envisioning for the upcoming winter. So following this, let's take a look at the transmission and congestion, and Jefferson will be going over the winter risk.
So we just wanted to highlight a couple of risks in the transmission congestion area that we thought may be of interest for the remainder of the winter here. The first one is Fox Lake Rutland, which is a pretty well-known constraint. Drivers, seasonal south and north power flows towards Minneapolis to serve the heating load that we would anticipate to see in that area. And we also have aggravating that would be a line outage from Freeborn to Winnebago, which is actually going to be, or is out and will be out for the duration of the winter season. That constraint typically driving bullish min hub. The second risks that we were looking at, Dresser Allendale, again another well-known constraint, and we've got an outage Dresser to 8th Street that would be out for the bulk of the remainder of the winter through January and into February as well, with potential for bullish risks towards Indy. The Glenworth transformer, we've got a line outage at Lime Creek Emery that is in effect and expected to go through the remainder of the winter season, again with light bullish risks to min hub there. And Harmony Genoa, a ongoing line outage, Alma Wabaco, scheduled for or is out and is scheduled to be out for the remainder of the winter, and also an outage at Marshland that is out for the remainder of the winter. And then, as Sonley talked about briefly, the coal delivery issues, which may help to drive that constraint with the bullish impact to DPC. So I'm going to hand it back to Sonley to wrap up.
Thanks, Jefferson. So we have a couple of changes to the market. One of it is the ELMP implementation. So I think over the last fall outlook, we briefly touched on this. And so this is basically the ELMP that allows the fast start resources that are either scheduled at limits or offline to set the price for the real time. Also allows the emergency demand resources, also called EDR, to set price in the real time. So I think this was originally going to be implemented at around the end of this year, and now this is pushed further, which will be, or at least it seems like it will be implemented Q1 2015. So currently we're still just looking over MISO's update, and I believe that this is going to be taking a little bit longer than expected. But basically currently the coordinated transaction scheduling bids on the MISO interface will be priced by the ELMP, and that is one of the discussions that has been put into effect. And lastly, we will be going over, I guess everybody's wondering about the day-ahead market changes updates. So the first intention to change the day-ahead market was that we want to better align the gas market with the power market. Currently, the way that is working is that the gas nomination is due way before the day-ahead close, and there's a little bit, actually a lot of the misalignment in between these two. So I know that FERC wanted to move earlier for the day-ahead close. For now, that is closing at around 11, and they wanted to move that to 9 a.m. Eastern or 8 a.m. Central. And that, of course, had a lot of objections. One of the many objections is that the change in the schedule will kind of increase the load forecast, wind forecast uncertainty. So people are worried about that. Also, there is going to be a lack of gas market data for formulating the offer prices if we do bring the day-ahead market close earlier than current. Also, we also had another concern about shifting the schedule for a lot of the people, for example, the real-time traders, and this could potentially force a lot of the companies to submit their bids and offer to the day prior, and probably leading to greater uncertainty or price volatility. So basically, there is a lot of objections to the switch for earlier day-ahead close, but we will stay tuned to see what FERC and MISO, their discussion is for the next couple of months. So that's about it for our winter outlook. Just to summarize, we went over the winter-fall recap. We talked about the previous winter-fall constraints for both the day-ahead and the real-time. We briefly talk about the potential cold season that is going to be happening in mid-January 2015. The polar vortex, we saw that last year, and it seems like it might be less of a concern for this year. And also, we talk about some of the new constraints, and one of it is the Dressel to Ellendale, and also some of the congestion risks around the Lake Field area that is due to some longer-term line outages. And lastly, we talk about the day-ahead market changes, which is not going to be in effect anytime soon. So we will stay tuned to see if there will be any updates on the MISO side. So again, thanks for joining us for today's webinar, and we will be collecting some questions, and we will be right back. Thank you. So we did get a question regarding if we will be expecting to see the polar vortex this year, and let's have Pat explain or elaborate on this a little bit more.
Yeah, I mean, it's definitely possible as we move further into January and into February when we're expecting the strongest cold anomalies that we could get a couple really cold shots, kind of like we saw last year, but we're not expecting it to be as extreme as we saw last year. That's kind of a once in 20 or 30 years event. So, like, again, to recap, we could see some cold shots, but nothing as extreme as last year.
Okay, so just to recap the power balance type of congestion, like Pat mentioned, we might be seeing some cold snaps again late Jan, earlier February. So that power balance, which is going to be moving in the direction of south to north, that might still have a chance to hit. But since we have had the hurdle rate, I believe that MISO have been handling transacting power in between interfaces much better than previous year. So we do expect to see the power balance, yes, but we will not going to be seeing the $1,000 shadow prices over that based on that. So the other question that we got was if we will be seeing the Monticello's East Wind Mac line congesting in the real time. So that is a pretty good question because Monticello's East Wind Mac has been the main concern for last winter, and this line was out earlier in the fall. This is going to be out until Jan 15, 2015. So that kind of crosses a month of that winter, which I believe that when this line returns from outage, we might still be seeing the Monticello's East Wind Mac binding in the real time the day ahead. I believe that is going to be bearish on Indiana, and should central zone wind comes in really strong for any days, we will be seeing that aggravating that Monticello's East Wind Mac type of congestion risk. So I think that's about it for all the questions. Definitely feel free to email if you have additional questions regarding the webinar or the content. Feel free to do that. We will also be compiling the webinar to PDF, and we'll be sending that along to all the participants in this webinar. And lastly, any questions specific for demand, feel free to send the email to Patrick Hagan or me at those emails, or feel free to give us a call during operation hours. Again, thanks for joining us for today's webinar, and we will see you for the next webinar.